The ongoing constitutional crisis in Pakistan amid the dissolution of the National Assembly by Imran Khan can adversely affect the fragile economy of the country. As per experts, the dissolution will further worsen already critical political turmoil in Pakistan. According to analysts, the current situation in the country creates a legal crisis that will impact stocks, bonds and commodities. They said that the quick resolution and early election will allow the new government to take much needed economic decisions. Pakistan's economy is already facing multiple challenges in the form of falling foreign exchange reserves, rising current account deficit and increasing commodity prices. A quick resolution and early election will allow the new democratically elected government to take the much needed tough economic decisions. Tahir Abbas, the research head at Arif Habib Limited, believes the market is going to continue to look for clarity on the political front as it will set the tone for the future strategy to handle the economy. This clarity will only emerge once the Supreme Court decision comes through. The economy has become subject to political upheaval, which raised concerns about the future of the International Monetary Fund loan program. This could have an effect on investor confidence in the country's economic outlook, reported Geo News. IMF looks forward to continuing its support to Pakistan, and once a new government is formed, it will engage in policies to promote macroeconomic stability and inquire about intentions vis-a-vis program engagement. Foreign investors pulled out money from the stock market and bonds at the fastest pace in 2 years in March. They withdrew investments worth USD 393 million in the same month. The rupee has fallen by 16.57% so far this fiscal year. The foreign exchange reserves held by the State Bank of Pakistan declined 19.5% to USD 12 billion in the week ending March 25 due to repayment of external debt, including repayment of a major syndicated loan facility from China. Rating agency Moody's in its latest report said the political unrest could slow down the stalling reform drive in the country and was credit negative. This raises significant uncertainty over policy continuity as well as the government's ability to continue to implement reforms to increase productivity, growth and secure external financing, including from the IMF. Fahad Rauf, head of the research at Ismail Iqbal Securities, said that since the start of the no confidence motion, the political scenario had taken priority over the economy. The PM's relief package was the start, where the IMF conditions were disregarded, which delayed the 7th review of the IMF's extended fund facility worth USD 6 billion. He said there will be a new setup that will negotiate with the IMF, and that can take some time. Even if the program is revived, the IMF is likely to ask for some tough measures like a substantial increase in petroleum and electricity prices, which will hurt in the short term but help stabilize the economy in the long term.